Hey, welcome back everyone. It is time for another red hot cover call video. Well, hey, look, today we're going to talk about two ETFs, leveraged ETFs that I absolutely love. We're going to talk about DPST and TNA. But more importantly, what we're going to do is really break them down. I'm going to show you the charts. There's something at the end of this video you absolutely have to know. You have to know how to read the charts. How many times have I heard where people get involved with a bad entry and they are stuck in that trade for months because they picked the wrong entry? Stick to the end of this video. I'm going to show you exactly the entry points for these two leveraged ETFs for which we sell premium on. We write covered calls, we sell cash secure puts, and then we buy dividend paying stocks. Stick around. I know you're going to like this one. That's right. We're going to talk about two leveraged ETFs I use, and in fact, I have trades on right now. I have two trades in my kids' accounts. I have two trades in my account, and I just did an in-the-money covered call on TNA. We use them primarily weekly because we can get in and out of these trades, short-term selling premium trades, knocking down 3 to 5% in a lengthy 1 week or a very timely 2-week trade. And that's what we love to do. When we use the in-the-money calculator, for which you can download for free at my website, cptdashboard.com, we love to collect about 1.7% for a 1 week cash secure put or in-the-money covered call using either of these highly leveraged ETFs. And before we get going, you need to understand we are using leverage. This is what gives us the edge selling premium. You can invest in the 1X version of these ETFs, but at the end of the day, what gives you our juice, it's the leverage part. And that's what we're going to highlight on this video, how we can make 3 times the premium as if we were investing in, say, a single stock. Yeah, single stock with all that beautiful single stock risk. Well, not here. We primarily use leveraged ETFs to indexes, so we're diversified. And they have beautiful charts because we have to know how to read the charts. Every single index in the world has a trading range. These do too. And I'm going to show you exactly where I entered all of my trades that I'm currently going to show you right now. So look, if you like anything you hear today, I want you to subscribe to the channel. It's right there and it's free. And hey, look, man, if you like this video today, bang that like button. It lets me know you like what I'm doing. Now, what we're doing is this. We're rather fired up because I love talking about leveraged ETFs when we're selling premium, writing covered calls and sell cash secure puts. That gives us the edge in the stock market because when we use these leveraged ETFs to sell premium, we could actually generate 3 to 4 to 5% monthly consistently. They're short-term trades, and we can use them feeling good that we're diversified because these are diversified leveraged ETFs. We're going to break this down, so I want you to stick around. Real quick, these are all of my trades that I have right now, and you can actually see we have at least 1, 2, 3, 4, 5, 6. We use leveraged ETFs all the time. We use TNA, we use SOXL, DPST, TQQQ, Yin. I love being diversified because how many times have you gotten involved with a stock, single stock, such as SMCI like me or Coinbase or Tesla, and you get in at the high because we didn't pick our entry point right? Next thing you know, we're literally kicked in the ribs and we can't use that position. We can't really use that stock to trade for a while, right? If we're going to sell premium, we really can't use it. So that really handcuffs us. And of course, when we're handcuffed like that, we have stress, we have emotion, and we're afraid to have our shares taken away, and we're not making that much money. I love using the indexes, so any one particular stock that I just named were to tumble, it does not mean the index tumbles. So this is what I do. I actually have a lot of trades. Those are all for the month of October. It is October 8th. I have a lot of trades on the books, and if those trades finish That will be a $28,000 month. Absolutely love it because we can generate cash flow. We can take that cash flow and buy dividend paying stocks for which they are passive income. And that is the way you do it. That's how you get wealthy right. You use the semi-passive investment strategy of selling premium. You take those premium profits and you buy a passive investment, which is a dividend stock that pays you passively, and you can live off of that money. See, this is how you do it. This is how you think wealthy. All of those trades you just saw, the members can copy. And I break it down such that you're able to copy them. Now look, do I advocate that? I'm not a stock tip guy. I use my own money in retirement to make these trades. All the members see that and they're thinking to themselves, hey, if this cat's putting real money in the game because he has to fund his retirement, well, then that trade is probably a trade he feels comfortable with. And that's exactly what I do for the members. I send them trade alerts. These are not trade tips or trade alerts that I don't take on. These are the ones I do. And you can really feel like you've got the edge if one of your problems is trying to find great stocks to sell premium against. And DPST is one that I use. Just yesterday, we did an in-the-money covered call where I had to buy the shares, and then I'm giving somebody the right, but not the obligation, to take them away from me cheaper. That's called an in-the-money covered call. It gives me downside protection because the stock was trading at 93.36. I'm going to give them away at 88. So they paid me a premium of $7.10. Now they paid that up front, but that doesn't mean I made that. See, that's intrinsic value. The difference from where I bought it to where I'm giving them away, that's intrinsic value. They paid me that up front. It's in my wallet. I didn't make anything, but the difference between $7.10 and intrinsic value is $1.74. That $1.74, based on the money invested, is 1.86% in literally 4 days. And the reason I show you this trade is because the members get these trades and they have a chance to maybe benefit from this information. Do this all the time. It's part of the membership. And one of the things I love to do is do videos for the members. So in the phone app that you will get all these members exclusive videos where I break down how I explain things. The NVDL profit that I made, $19,000 in 75 days using NVDL, which is a 2x leverage ETF to NVIDIA. I break it down and then I explain at the very end how I paid more to buy back an option, but I still made money on the premium, and it has everything to do with that time value component in the option. So I absolutely love doing this for the members. You can go to cptdashboard.com and get your 1 free month offer. I have 3 offers: a 1 free month offer, a 2 free month offer, and a 3 free month offer. Once you go to cptdashboard.com and take advantage, I would love to welcome you aboard. Now, looking at DPST and TNA, stick around. I'm going to show you the charts here. Hey, look, this is not a TikTok world here. These videos go more than 32 seconds, okay? If you're really going to up your game and make real money in this selling premium game, writing covered calls and selling puts, and then taking that money and buying dividend paying stocks that actually create real money, I mean, I'm generating $22,000 a month in dividend income, and that money keeps flowing in month over month, and all of it was generated by selling covered calls and cash secure puts on ETFs like this. They are the absolute edge in trading, if you're asking me. Why? We get the 3x premiums, and that's much more than you can make on a single stock. So let's talk about DPST. I love this. This is a regional banks ETF. If you go to Yahoo, search for DPST, you can look at what is inside this ETF. This is an exchange traded fund. There is a company that takes a bunch of regional stocks. They take their stock and put it in this ETF. Now you're investing in this basket of stocks. Now, because it's leveraged, they're going to do things like use swap agreements and do all kind of different things to give it that 3x leverage. We're going to talk about that here in a minute. But at the end of the day, just know that this index moves 3x to the 1x index that somebody created as well. This is the 3x version. It's a bull version, which means as the stocks go higher, this will go higher as well. So in this case, we're using DPST for the regional banks. Now my mindset is this: banks in the US are about the most protected entity in the world. The Fed will bail them out, and they've already proven that with 2007, with the real estate crash, and just recently, I believe 2 years ago, when a couple regional banks in and around Silicon Valley went belly up. They bailed them out with the help of some of the big brokerages buying them out. I love the financials, and DPST is a regional bank 3x leverage ETF. Let's talk about the pros of DPST. We have volatility. We have a lot of volume because a lot of people like trading it. So that means we have a lot of option volume, which means we have a lot of open interest for our options. Remember, stock prices are real time. Option prices are static. They sit there, limit orders, waiting for somebody to come in and pay them or get paid. You want open interest for your options. If I was doing a cash secure put, 88 strike, that 88 strike for that expiration, I want open interest. I don't want just one guy sitting there looking to pay you. I want 100, if not 1,000 open orders, because the market maker makes a market. And when the market maker makes the market, we can get our mid, right? We want our mid price. You always do limit orders. Never do market orders unless you absolutely have to. So we also get amplified gains because this is 3x. The 1x is going to move 1. This is going to move 3. Now we're diversified as well because this is a basket of stocks, not just one. High premiums for premium sellers. We are literally making more money per trade selling premium than if you were to invest in Nvidia moving up 3 or 4% in one day. Call options are more lucrative using 3x leverage ETFs. I ran this yesterday where had I bought Nvidia and I did an at the money 30-day covered call, we'd have made in and around $7,200. Using TNA as an example, same time frame, same amount of money, we would have made $9,200. And with these ETFs, they're priced a little cheaper. We're able to buy more shares or do more cash secure put contracts. TNA is trading for in and around 42, and DPST, last I checked, was around 95. TNA has the exact same benefits, right? Everything I just said about DPST, same for TNA. Now, the major difference with TNA is that it uses the Russell 3000 small cap. So it's a basket of stocks, just like DPST is, but this now has the Russell 3000 in it. It's leveraged as well. So again, we're diversified. Not one stock is going to collapse the whole deal if they had a bad day. So the question really becomes, on the pro side of all of this, what do you feel more comfortable with? Do you feel more comfortable investing in regional banks or the Russell? And that's really your question, because the benefits are you're going to get the 3x leverage for your covered calls and cash secure puts. Now, I will say this, DPST will pay a dividend every once in a while because those stocks inside pay dividends. I don't think I ever collected a dividend using TNA, but that doesn't mean they don't give one. You're going to see on the next screen how much I've profited from these two. But before we get there, you absolutely have to know the cons. You know what? Actually, right now, before we get there, if you like this video, bang that like button. Man, I'm jacked up today. I got my second cup of coffee talking leveraged ETFs. We do have cons when it comes to these, and they're scary cons. First of all, we have volatility. And this is the biggest one because volatility for a lot of people means risk. I hear this all the time. They say, John, these things are just too risky. They move too much. And I ask them, what's risky about a stock moving one way or the other? Look, if you're going to tell me that the regional banks in the US or the Russell 3000 is risky, then yes, I'm going to agree with you. These are risky. What we have with the 3x leverage ETFs is volatility. They move 3x the index. So when you have that mindset, and truly it is a mindset, that it's not the movement in the stock that we need to worry about. It's the true underlying assets that we're investing in. That's the risk. Hell, I'll tell you, if you're going to sell premium and you have no volatility, that's your real risk, because I would be putting money to work. I'm not going to make anything near what I can do here. And I'll be honest with you, single stock risk, that is scary. You can bring me the biggest S&P 500 company, and I will say to you right now, something like TNA that trades in the Russell 3000 is actually less risky. And all we have to do is really look at Merck. Merck is one of the greatest pharmaceutical stocks. I owned it at 120 and sold it. It rallied to some 130, and now it's trading for 108. Tell me where the risk is at. TNA is an index, and it just moves with the index. And as the overall stock market moves higher, so has TNA. Volatility does not equal risk if you're asking me. If you can get over that, that is going to be your breakthrough to use indexes, leveraged indexes like DPST and TNA. Now, two things. Magnified losses. We moved 1% down, you're moving 3% down. We've had days where the NASDAQ dropped 1,000 points and TQQQ got ripped in half. Not literally, but I'll tell you what, disaster. These things move 3x. So in good times, hey, pop the champagne. We have bad times, you literally can't look at the screen. Blood in the streets. It's all about what are we investing in? What's the underlying investment? Is it a single stock, a one-hit wonder stock, or maybe a company like Merck that's kind of fallen off and we don't know when it'll come back? We're investing in indexes, which is a basket of stocks. And to be honest with you, they already vetted them for you. The companies that do this have already vetted them for you. So DPST is putting in the best regional banks in its basket. And TNA is the Russell 3000, and you have to be vetted to be in the Russell 3000. So what do we have to vet in terms of doing our due diligence? It's the chart reading. And that's what's next in this video. Do not leave me now because I have one last thing to talk about. Then I'm going to go to the chart, show you exactly where I entered these trades. The edge, we sell premium against these. We collect all that premium. It's beautiful. We just trade the range, which I'm going to show you here in a second. But here is the problem with leveraged ETFs that a lot of people have concern with. The daily rebalancing. Every single 3x leveraged ETF has to rebalance. There's reasons for that, and I'll tell you what, if you go to the investor Wikipedia page on how leveraged ETFs work, and I'll put the link in the comments, I want you to read where daily rebalancing affects these in pricing. And I'll be very brief. If DPST moves up 3%, falls 3%, it's not even money. And that is what makes people have questions about it. See, they have to rebalance it every single day by selling assets or paying down debt to give it that 3x leverage edge. A move up 3% and a move down 3% doesn't mean you're at zero. You might be close, maybe 0.1 off, but it's the rebalancing that people don't like. In fact, they'll tell you that it's a depreciating asset. And what they mean by that is, if we started day one and went 365 days later, if these two ETFs never moved a nickel, almost every single day you'd have to rebalance, and basically you'd have your investment would fall ultimately by the expense ratio, and if there were any daily rebalancing issues. So you'd have a depreciating asset. But what I'm going to tell you is this, I mentioned this right before I said that, our edge is we sell premium. We sell premium, which means when we get the 3 to 5%, that's a fixed number. So we don't have to worry about whether we have a depreciating asset. If I buy TNA at 42 and I sell the 43 strike and I get $3, look, if they take my shares, that's $4 in my wallet. I could care less what TNA did with rebalancing and this, that, or the other. I got my $4 on my $42 invested. That's how you look at it. These are not long-term investments. You do not buy DPST or TNA and just hold it for years and years and years, because these do have that rebalancing issue, and over the years you're going to pay so much in expenses. We use them for short-term covered call and cash secure put trades, maximizing what we can make. What a perfect segue. Now it's time to talk about the money that I've made with these two ETFs. Notice DPST, I just started trading this year. Actually, I had a member let me know about it, and I did a little research. With DPST, I've done covered calls and looks to be one cash secure put. Currently, I have the 88 strike and the 90 strike in the money covered call, and my son has a 98 covered call. I'm going to show you on the charts where DPST has a trading range, and we're playing that range. Now, TNA for me is the 800-pound 3x leverage ETF gorilla in my account. This is just 2024. I've been trading TNA since 2016, and I'll never forget the day I did. You ever heard of Chuck Hughes? You've heard of Chuck Hughes, Mr. Stock Trader Award winner, contest winner. He used TNA in some of those financial contests, writing covered calls against the shares when it was trading for about $40. As we were coming out of the 2007 real estate crash, he used it in that competition to generate millions of dollars in this competitions, selling premium against TNA. Well, that's when I got involved, been trading it ever since. This is 2024 alone. I can literally build a career trading TNA all year. $50,000, and it's only October 8th. We currently have an in-the-money strike using the 40-50 strike. These are very important strikes because it talks about my entry points. Entry points are the number one problem for most traders like yourself. We get involved in the wrong moments and the stocks will fall or react differently. See, once you learn this technique that I'm about to show you, then you'll be able to make better entry points because it's all about the entry points. But more importantly, and this is what I need you to know, when you sell premium, you always need 2 trades. You do your first trade, but if that trade goes against you, you have to have a second trade. Why? Because you cannot be paralyzed when the stock falls against you and you don't know what to do. Everything I've done to this point has led me to this point where I have confidence and conviction and I'm not that greedy. When the stock's trading at $42 and I do the 40-50 in the money strike, I don't make as much premium, but I make enough for which it meets my guidelines. In the case of TNA, that trade is going to make me about 3% in about 8 days. I stay in my lane and I don't get too loose. The money is juicy, but we have to make sure we're making good decisions. Now let's go to the charts. I'm going to show you the entry points for both of these trades and why I did it. I think that's going to be a great video for the members. That's right, I'm going to do a video for the members talking about entry points. I think I'm going to do that after I get done with this video today. Now, here's TNA. TNA's trading for $42.67. Now, if you've been watching my videos, you know I always try to find a stock's trading range and or what I call its sandbox. It's going to play in the sandbox, and we want to make sure we're picking favorable spots to enter trades. And it's very clear that we always want to try to enter near the bottom of its trading range. We have 8,000 stocks we could be using. If a stock is not trading in its trading range, it eventually will. It eventually will. You just have to go eat from the table of another stock that might be trading at a more favorable entry. And then as this stock finds itself pulling back, you can then come back to this table to eat. That's how I do it. I'm trading TNA and DPST now. I was trading MVDL for the last month, but now that stock's gotten away from us. We're not going to be eating at that table. We're now going to be eating at this table. And that's how I do it. What we want to notice is this. This was TNA's old trading range. Anywhere between 34 and 41, we would trade that. 34, we're getting involved all day long. Yes, we've had moments where the stock market has pulled back, and if you remember, that was last October when everything was ripped. But for the most part, look at that beautiful trading range, and we can get involved every single time it's near the bottom. Now, TNA has moved higher. Why has it moved higher? Because the feds are lowering interest rates. That means all the small to mid-cap stocks are going to be able to borrow money cheaply, expand their business, and hopefully they grow their profits. That means the Russell probably goes higher. TNA is going higher. So the way I see it is this. TNA's new trading range is going to be 40 to 46. And that's how I'm going to trade this. And that's why when it was trading for 42x, I went ahead and bought shares at 42x, and then I did the 40 in the money covered call. Now I picked up a premium that's going to pocket me about 3%. Remember, they paid me the intrinsic value, so I have downside protection from 42x down to 40. So my cost basis is 40. If TNA were to fade and this were to fall back to 40, well, that trade will end and I will keep those shares. Then I'll write a weekly or a 2-week, 3-week, or even 30-day trade, picking up another 5 to 6% cash on cash. Now DPST, same deal. It had a beautiful trading range, and that trading range was anywhere between 60 and 80, and we did many covered calls. Cash secure puts near the bottom, and if we did covered calls, we would buy the shares and do the in-the-money strike near the cash secure put strike price. I want to give myself that downside protection. DPST has made a beautiful run because the financials are going to benefit because of the rate cuts. Small banks will loan money, making money. I thought 88 was our number, and sure enough, rallying to 120, back to 88, rallying to 110, back to 88. Now it's moving higher, probably goes back to 110. When I pick that strike price for the cash secure put or the in-the-money covered call, I'm going to go ahead and pick the 90 or 88 strike, because if I'm going to plant my flag, right? If I'm going to plant my flag and make a trade, I want it to be at the 90 or 88 strike, because if it fades back, it'll fade back to that support. I'll be able to have a great starting point for what? Trade number 2. We do trade number 1, pocket the premium. If it goes against us, trade number 2. Where's trade number 2 starting? At the bottom of its range. Learn the charts. You know, back in the day, they would say read the ticker. You have to learn how to read the ticker tape. Well, in the modern age, that means learning how to read the charts, the technicals. All of these ETFs have stocks inside that have already been vetted. We just need to understand the technical trading as to when it trades at the bottom of its range and where we're getting involved. I always take a position in and around the mid or the bottom of its range, because I can usually do 2 trades, making profit and potentially getting out of the trade. This is what I offer for my members. CPTdashboard.com, click Upgraded Dashboard. 1 free month offer, 2 free month offer, 3 free month offer. I want you to join me. I would love for you to join us. I would love to welcome you aboard. I hope you enjoyed this video. If you did, bang that like button. It lets me know you like what I'm doing. Hey, look, be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.